Welcome back to Fast Market here on the TD Ameritrade Network. Let's bring in our next guest for a cash tag segment, and that's going to be Andy Swan, the co-founder at LikeFolio. Welcome back to the show, Andy.
Thank you.
All right, so we're talking cruise lines. It seems like demand is pretty robust. We were just talking about the airline industry. People are flying everywhere. Seems like demand from some of the cruise lines, according to CEOs, has been really robust, but they took on a lot of debt. Are you guys seeing any data out of LikeFolio that's supporting this nice rally that we've seen in RCL?
Yeah, we are. They call wave season. January through March is called wave season in the cruise industry, and that is kind of like their Black Friday. That is when they're going to sell most of their cruises as people make their spring, summer, and early fall vacation plans. And so really critical time period that we are just now wrapping up in the cruise industry, and LikeFolio data is showing from a consumer macro trend, demand to go on cruises really strong, up 34% year over year, higher than pre-pandemic levels. And so we think that this is going to be a really nice season for the overall industry in 2023. So we're really looking forward to that. When we break it down on a company by company basis, you got three main players. I think Royal Caribbean, Carnival, and Norwegian are top of the list. And I really think Royal Caribbean's kind of in that sweet spot where they're seeing really nice, robust consumer happiness levels increasing. They're also seeing consumer demand increasing at the highest rate of the three. I think they're in a nice sweet spot of riding the wave of the general macro trend and being, not the cost-conscious provider, but also not the one with the highest level of expenses like Norwegian. So kind of like Royal Caribbean here, like you said, the stock has moved considerably over the last few months. The market may be already pricing a lot of this in, but we do think that the general direction of the market and the enthusiasm that the CEOs of these companies has is warranted.
Andy, the catastrophic effect that COVID had on these cruise lines, the debt they had to incur to withstand the long periods of shutdowns, that's all dissipating now, right? Now it's purely how quickly they can bring in revenue. I mean, Royal Caribbean, Tom, 2022 revenue, $89.6 billion in revenue. All these companies are profitable. The demand is off the charts for them. They're now at full capacity. Now it's just getting their balance sheets healthy, paying down debt, using that free cash flow to get healthy. What am I missing here, Andy? This is just a big, and you can see it in the chart of the stock. It's just a big recovery, long, slow recovery, Andy.
Yeah, it is, and I think the one thing I would add on top of that is, when you look at China's travel reopening, they have barely scratched the surface in terms of that comeback of that major tourist type of economy, and so that's another log on the fire of this recovery that could happen. I think that here, in the West, we're generally past most of that, and most of the recovery is well underway, and it becomes kind of a pricing issue at this point for these cruise lines. They're coming out of a period where literally no one was coming on the ships to now everyone wants on, and how they find that price balance again. And they have some increased costs on their side as well. So be very interesting to hear from CEO. I think Carnival put out a good report this past week, and I will say, just from a perspective of earlier this week, I let my feelings on Lululemon kind of get in the way of what is the big story, and that is luxury is doing very, very well. So if I'm looking at any companies in this sector or any sector, I'm going to stay on the luxury side of things. Lulu beat us with an upside surprise, very impressive. I think the same could happen with Royal Caribbean and some of the higher end providers in this industry.
Yeah, and I was looking at the happiness mentions on the 90-day moving average on your chart here, and it seems like NCLH, Norwegian, which is maybe the higher end, the happiness is highest there. Do you see that trend continuing where you have to focus on maybe the better brands within a specific sector? And do you have an earnings score on this one?
Yeah, that's the lesson we're learning over and over again this year, is that the higher quality, more luxury, higher end providers are doing the best, and the rest of the industries a lot of times are struggling. Now this one has a tailwind at its back for all players, so we like that. The stock's up considerably, gets us to a neutral score, unfortunately, because the stock is up so much. But long term and through the rest of the year, we really do like these names, and especially the higher end names in the field.
Yeah, I think one of the big keys, going into their earnings, their next earnings, is going to be how they're handling their debt, because they always give those mid-quarter updates that say that bookings are solid, back to 2019 levels, even higher at that point. All right, great stuff as always. Thanks for the data, Andy.
Thank you.
That's Andy Swan,